Welcome to the Behind the Curtain podcast, your real-world guide to real estate investment and property management.
Welcome back to another episode of Behind the Curtain podcast. I'm your host, Brett Bernard, and today we brought back Tina Tallarico.
I'm Tina Tallarico with Capital City Mortgage. I'm a commercial loan officer. I've been in the financial industry for 27 years now. I was on the residential side and have been working with investors for about 15 years now.
So Tina, we brought her back. We had an episode about a month ago, wasn't it? We got a lot of inquiries about the discussion that we had. Tina's here today to discuss interest rates and different options and potential scenarios for you investors out there. And before we get into interest rates, I want to discuss something that's been irritating me this last couple of weeks because I've gotten calls from investors, and they're kind of hem-hawing around about buying. So I want to talk about, is now a good time to buy? I get that question from a lot of people. They're like, well, should I be buying now? But interest rates are 7.5% to buy an investment property. Let me put it to you this way. In May, June, July this past year, I sold more real estate in those 3 months than I did all the previous year. What baffled me was that people were paying retail and over retail. They were buying property as if Joe Biden said, we're never cutting down another tree. We're never building another house. So therefore, you better buy what's out there now because you're never going to get another one. That's how people were buying. It was insane. And the hedge fund groups were buying blocks of houses, sight unseen, and paying $20,000 over market. I still today cannot put together their thought process on that. I don't understand, other than the fact they had a lot of cash they needed to do something with, and they just figured they would buy up a bunch of real estate and burn it up that way. So those folks that bought this past year, and look, I bought a lot of properties for people, but I bought those properties after giving them a good education. Yeah, this is what the house is worth, and this is what you're paying. So you're not putting yourself in a good position financially, but they were looking strictly at the cash flow. They weren't looking at the asset value, which is fine. Cash flow is key. That's the main thing you should look at. You got to be reasonable when you're looking at the value of the property. So those folks that paid $10,000 over market this past year in an investment property that's cash flowing today, now that $110,000 house that they bought in Raleigh that was rented for $1,200 a month is now worth $95,000. Maybe. You could buy that same house today for $95,000. So that investor has lost a percentage of his value on his asset. Because of inflation, and a lot of these renters live paycheck to paycheck, a lot of them now can't afford $1,200. So their lease expires, they're leaving those properties and going and finding a place for $900 a month because their check's the same every 2 weeks. But their costs have gone up, so they've got to reduce expenses. And the first place they're going to go is rent, or at least one of the few places they'll go is rent. So now you've got a property that you paid $110 for. You're renting for $950 a month to keep it rented. You're not even getting the 1% anymore. You've lost $15,000 in your equity position of the property. So over the next 3 years, do you agree that things will turn around? They always turn around.
I do.
The real estate market always goes back up. Guarantee. I can say 100%. I'll put everything I own on the line. The real estate market will go back up.
It will.
Guaranteed. Unless a meteor hits Earth tomorrow and it's over, then yeah, it won't go back up. We'll all die and it'll be done. But if that doesn't happen, the market's going back up. Let's take that scenario that I just told you, and I'll say the market, let's say November elections happen, things change and confidence goes up and people start buying and inflation kind of levels off and things get back to somewhat of a normal pace. Now that investor has to spend the next year or 2 or 3 years getting his asset back up to par where he was at. Now let's take a person today that were to take and buy the exact same house for $95,000 and rent it for $950 a month, because that's what the market dictates it's worth and what the rent comps say. Where do you think that investor is going to be in 3 years when confidence comes back? They're now going to have a house with $15,000 equity. They're now going to have a house that has increased in rent cash flow $150 a month, and they're in a much better situation. So my point to this is to get people to understand smart investors buy when the market is scary. Those are the guys that make the money. Waiting for a market to cap out and then decide to be an investor and jump in is ridiculous to me. I don't understand that theory. You go and you buy Amazon stock when it's $140 a share or whatever its highest point it's ever been. I know a lot of people that bought Amazon stock. Well, guess what happened 3 months later? It tanked and they lost half their value. So now they're going to spend the next couple of years regaining what they lost just to get even. So I want to hear your take on that. You've been in this business a long time. I haven't been 27 years. I've been 21 years in the real estate business. So what is your take on that theory? You made a lot of money. I made a lot of money last year with people that wanted to buy at top of market. But I did it with an education to them that you do know that if anything changes, you're going to be in a negative asset position.
Definitely so. And that's really what they need to focus on right now is gaining that equity. The market's going to come back. There's no question about it. It has been in a decline, but I think it's going to turn the other way. And now's the time to buy. There's no question about that. You're exactly right about everything you said. And I have investors that come to me and they have the same concern about the higher interest rates. However, we're seeing properties that were 150 or 120 just a few months ago, and now they're $10,000 to $20,000 less than what they were just 120 days ago.
Which is the best time to buy? Right? I mean,
absolutely.
I haven't done the math on this, but buying a $110,000 house at 5.5% interest versus buying a $95,000 house at 7% interest, I'm going to guess that your ratios are going to be in the same ballpark. So then at that point, it comes down to cash flow. What do you pay for it? What is the cash flow? If you can buy a house that will have $15,000 in equity in 2 to 3 years, 4 years, and it's going to increase $150 to $200 a month in rental income in the next 3 or 4 years, and you can buy it today and break even, would you go buy? Would you go buy Amazon stock? If somebody said, "Listen, buy it today at $80 a share," I guarantee you it'll say $80 a share. All it will do is go up. Now, values may drop some more. You may buy a house at 95 and all of a sudden it's worth 90. But it's still going to go back to its original point and exceed in the next 3 years or 4 years or 5 years, whatever that's going to be. Look at 2008 as an example. 2008 and 9, everybody that is it. The world's coming to an end. The real estate market's crashing. We're doomed. People were, walking away from their houses as if that was it. People were jumping off of buildings down in Wall Street. But here in Memphis, by 2012, we were already back at normal levels. 4 years later, we were at normal levels and exceeding our previous numbers before 2008. So think about all those folks that just weathered that storm, or those folks that came in 2009 and just scooped up all the property that people were walking away from for pennies on a dollar. Think how they did. I know one particular guy who took $180,000, turned into $1.2 million in 7 years by doing that. I'm trying to tell people they need to be buying now. Buy now. If you can cash flow a property and break even, you need to be buying property now because now's the best time to buy. December, January are probably the 2 best months to buy this year because I think that's going to be our lowest point. As soon as we hit March of next year, I think people are going to realize the world's not coming to an end. Everything's going to kind of stabilize, and they're going to go back into the market and start buying property again, owner occupants especially.
I do too. Right now, we're seeing the investors aren't battling with the owner-occupant buyers. That has slowed. But investment properties, they're still buying them right and left. A lot of them are looking at the same advantage that you're talking about.
The smart investors are looking at those angles. The newer investors are a little more skittish, and I get that. They're taking out a mortgage. They've been brainwashed into believing that investment real estate is income building. Get away from the notion that you're going to buy 10 rental properties and quit your job because it's not going to happen. You want to buy 10 rental properties that 10 years you can sell and triple your money, right? Or cash out, keep them for 25 years and cash out and retire with a couple $1 million. That's what rental properties should be based on. Now, I know that some of the loans are geared on cash flow. What's the loan that you mentioned it to me? I can't remember the acronym for it.
It's DSCR, which is debt service ratio.
I want to talk about that loan because that intrigued me. You mentioned something to me about it. I did a little research on it. I'd never heard of this loan before. But this may be an opportunity for these young investors who are nervous about the market to do something like this or possibly do an interest-only loan to create the cash flow they want even in a bad economy.
That's correct. Or we're offering 40-year terms. We've always offered 40-year terms for a long time. However, they're more popular now than they were before. And you can always refinance. I mean, you can always refinance if you want to go to 15 or 30 years and you're not comfortable with 40. Refinance is an option down the road. Also, what I'm seeing is, once these investors are building some equity in the properties, they're refinancing them, taking out some cash, using that money to go purchase more properties, growing their portfolio. With the DSCR loan, we don't ask for tax returns, W-2s, pay stubs. We don't use a debt-to-income ratio on any of our loans. We specifically look at the property investment potential solely. We don't look at the investor's personal income. We ask for a bank statement just to show that you have the funds to close. But other than that, we really don't ask the investor for any personal documentation. It's all about the property, all about the investment. I have investors that have recently bought 3 or 4 properties and they can't get a loan because they have to debt ratio. You cannot use that rental income until you filed it on your tax returns.
So if you do a 40-year loan and your payment's $495 a month, whatever it is, I believe to answer Richard's question, you could pay $800 a month on the principal balance of the loan and pay it down faster. Absolutely. But then all of a sudden you have a month where cash flow is tight and you can't make a double payment, make a single payment. I like that idea because you're kind of in control of your cash flow. You decide how to use the cash flow. Me personally, I'd pay the loan down in 20 years, or I'd run it for 3 to 4 and then refinance it into something a little more suitable. But a 40-year amortization, I don't know if you can get any better than that. That'll negate the increase in interest rates currently, I think, when it hits your cash flow.
That is true. And there's really no disadvantage. I mean, even if you do a 30-year loan, you're not going to stay in that 30-year loan long term.
I hope not.
For the most part, they're refinancing or selling in 5 to 7 years, sometimes 10 years. We see some of them keep them 10 years, but 5 to 7 years, they're out of that loan.
Right.
So,
right.
Yeah.
Now, is there a prepayment penalty at 40-year?
Yes, there is. They go. I typically quote it at 3 years. They go up to 5 years. You can reduce it to 1 year. So
you got a 40-year amortization. You keep the house 5 years. It increases 25%, and then you flip it, make some cash, turn around and buy another property. I mean, it like you said, 5 to 7 years is the average term of a holding of an investor. I've got folks that have held property for 20 years. They're paid for and they've got a significant asset sitting there. They paid $30,000 for a house. We just did one for between our title attorney and one of my investors. He bought 7. I think he paid over the last 10 years. He acquired those properties and probably paid $35,000 a piece. So he probably had all in $250,000. We just sold them for $470,000. So he doubled his money in literally 7 to 8 years.
With these loans, you can buy as many properties as you want.
There was a time, where Fannie and Freddie they have a cap at 10 properties is the max you could buy. So then what they do is they open an LLC and buy 10 in the LLC, then they buy 10 in their personal names. But what Tina was saying was that the particular loan product she's talking about, there is no cap. You can buy 100 properties. You can buy 1 million properties. There's no cap to how much money you can borrow as long as you can show financially you can support the loan and the debt service. And
a lot of investors cannot support that with their tax returns or even the rent that they're claiming on their tax.
So basically, if I want to buy 30 properties tomorrow and they're all renting for $1,000 a month and I use the debt service loan, I'm going to be able to show $30,000 towards servicing that loan. Correct?
That's correct.
Simplistic as it is.
That's
so
correct.
That gives you the ability to buy what you want, as long as you've got, a decent credit score but you don't ask for income.
No income. No income whatsoever.
What is the credit score requirements on that?
On the DSCR, we can go down to 680 on those. Over 700, the terms are better.
More favorable? Mm-hmm. What's the interest rate running on that?
The interest rates are running anywhere from 7.5 to 8.25.
So you got to make sure you can cash flow these, at least break them even. In a nutshell, that loan to me sounds like something that, as long as you have a decent credit score, you show the income to service the loan, they're going to consider the cash flow of that property as a deciding factor on whether you can get that loan or not. Is that correct? Or are you saying you have to file it on your taxes first before you can use that income?
No, you don't have to file it on the taxes. What we do is we use the market rent. If the property is currently leased, we can use the leased rent.
And you attribute that to their ability to support the loan.
Right, to support the payment. That's correct. 1% is the norm, which you want to, at least cover the payment, taxes, and insurance.
They need to show $1,000 a month income when you say 1%.
1%, which means the rent versus the note, taxes and insurance. Gotcha. So it needs to be a break-even situation. However, we do go down to 0.75. So if it's not quite there, that's okay. That's okay.
As long as you've got the other income to show you can make up the difference or support the difference.
Yeah, and we still don't ask for income documentation, even on a 0.75. No documentation on income.
Did we not learn our lesson in 2008 from that?
Well, I'm thinking the same thing, but they're looking at the big picture and they're looking at credit and that sort of thing.
But at the same time, I think 2008 also showed a lot of these lenders who just rolled over on their backs and died. That if they had just hung in there for a couple of years, or at least taken these assets back and sold them, they would have survived. They went doom and gloom in 2008, and a lot of these banks rolled upside down and died. But they could have survived, I think, if they had taken these properties back. When people walked away, sign a quick claim deed release and just take the property back and create it, at least have it as an asset on your books, and then sell it when the time was right and recoup your loan and plus some. I don't understand the why a lot of the banks did what they did, but I think, if I was running one of these big banks, that's what I'd have done. I'd start buying back those assets or taking them back, letting people walk away free and clear, and just stacking them up on the side until the time was right to liquidate them and make some money.
The investors right now, they're, especially like you said, the newer ones, they just cannot grasp the advantage of buying right now.
Right. Well, let's talk about that. Let's say you get a new investor who can buy 10 properties tomorrow on a loan. Average investor, when they've got a mortgage, wants to produce about $200 a month in free cash flow after your note, taxes, insurance, and whatever else. But out of that $200, you're going to spend at least $100 of that on maintenance and whatever. So the reality is going to be $100 to $150 of property positive cash flow. So how many properties do you need? That's what I would ask a young investor. How many properties do you need to quit your job? What do you make now? I make $80,000 a year. Okay, well, let's do the math. But you're going to need 72 properties in order to equal your current income at those numbers if you're taking out mortgages. So if you're listening and you're a new investor, get away from the cash flow theory. That's the dumbest theory in the world. Investment real estate should be about asset building. You don't buy stocks in the stock market for income. You buy stocks, you put money in a 401k to let it grow for retirement. You got to view real estate as the same thing. That's the only way you're going to do well in this business.
That's true. I'm working with an investor now, and he's buying 36 properties, and he's been doing it a long time. And so he knows the advantage of buying right now, why prices are down a little bit. He'll turn around and he's going to rent all of them. However, a few of them have some pretty good equity in them right now, and he'll rent them for a year or two, turn around and sell out which ones he can make the most money on, take that money and turn around and purchase more. However, the majority of them he'll keep long term. So obviously, and he's been doing this a long time, so he understands the advantage of buying right now.
Tina, how can people listening get in touch with you?
I can be reached at 901-826-7218. Be reached anytime at that number.
And I would encourage you, if you're considering buying real estate, number one, call me, Brett Bernard at EPM Real Estate, 901-692-7401. I've been in an investment game a long time. I've been a real estate developer. I've owned my own rental properties. I've owned 41 at one time. I've bought, sold, developed, you name it in real estate, I've done it. And I have investors from anywhere in the country and anywhere on the globe that come to me, and I help them buy portfolios. And 9 times out of 10, I send them to Tina when they need a lender, because Tina has got a basket of loans and ideas to help people out. You're not a one-stop shop. You don't have one program that if it works, it works. If it doesn't, it doesn't. Tina in one particular deal, a package deal, worked tirelessly to get somebody approved who honestly, there was a point I thought, man, this thing's going to come unglued. There's no way it's going to finish. But she got it finished. I appreciate that. We got it closed. So just give us a call if you're interested, because we'd love to educate you further on the market. Don't be too proud to ask questions. I always tell people, I get this a lot. This may be a dumb question, but if you don't know the answer, it's not a dumb question. Period. That's how I view it. And I've educated a lot of investors who are now seasoned investors and doing very well on how to buy, when to buy. When I tell you now is the time to buy, now is the time to buy. You should be calling me or your agent if you've already got one, or calling Tina to talk about loans. And you should be buying today, because unfortunately, if you bought in July or August, the chances of you actually getting positive in the next 2 or 3 years is slim. But if you buy now, the chances of 2 or 3 years of you gaining is very high. I guess the main point I want to make is there's all kind of opportunities for young, new investors to still be buying today. If you're concerned about cash flow, if that's your only reason to buy, then look at an interest-only loan that you can refinance when the market changes. Look at a 40-year amortization, which Tina discussed, which will help create that cash flow you want until things change and you can refi and increase your cash flow. There's no reason not to buy today. There really isn't. So you should be in the market buying. If you're not, if you're going to wait until the market turns around in the next couple of years and buy at the top of market, I feel for you, but you should call me and let me educate you, and let's discuss why you're doing that, because I truly believe now is the time to buy.
Thank you for listening to Behind the Curtain Podcast, your real-world guide to real estate investment and property management. Be sure to subscribe at BehindTheCurtainPodcast.com. And if you'd like to learn more about Enterprise Property Management's real estate services, please visit us on the web at epmrealestate.com. This has been a Sound Ideas Group production for Enterprise Property Management, Inc.